Thanks for joining us. I'm Marlon Bowling with a look at your ag commodity markets here on a Monday. I'm joined by Dewey Strickler of Ag Watch Market Advisors. He's in Franklin, Kentucky, and Dewey, you're on the dry side. The front hasn't made it your direction quite yet. What do you think that front may or may not do to the markets here this week?
Oh, I don't know if it's going to have much of an impact as far as this front coming in. We got some places that could use a little bit of rain, and when you look at the conditions through August the 7th, they look mostly benign. So I don't think it'll have very much impact.
All right, let's take a look at how we're opening up in the trade here today, and we'll start with that corn market. Overnight, we were about 3 cents higher in general, and we are showing September with a last trade of 4.16, and December 2 higher at 4.26.5. Also on the soybeans, a little bit higher this morning as well. The soybeans, we have the September 4.25 higher at 8.93 and November 4.5 higher at 9.05.5. I thought it was interesting. Found a map, and there was quite a bit of talk about this over the weekend with an 8 to 14 day outlook. We have it on the screen right now. It's from NOAA, but anyway, it covers August 5th through the 11th. And it just draws a giant bullseye right over the Corn Belt from eastern Missouri, southeast Iowa, all the way through Ohio and into the western half of Pennsylvania and also western New York. It covers that entire region with below normal temperatures in the first part of August. And I had to wonder if that caught the trade's attention because the crops, the corn and soybeans, really have some catching up to do. This is not going to help accumulate any growing degree units.
I think the trade is looking at that somewhat. You have to keep in mind that in the upper Midwest, your first frost dates are usually between September the 15th and August 1st, and we're at least 2 weeks behind, some places 3 weeks behind. I think the trade is looking at that. I think also the trade, we do have the meeting between the U.S. and China in Shanghai this week, and I think there might be just a bit of optimism that we could be getting a step closer to getting an agreement, and we might see some goodwill purchases. But, don't hold your breath on those.
Now, the wheat is higher today, too, and you don't hear wheat mentioned all that often in China trade talks. Let's take a look at Chicago wheat here. Currently, September up 8 at 5.04. And in Kansas City wheat, we have gains there as well. We have September 4.5 higher at 4.36.5. The Minneapolis wheat is higher by about 4 cents on the nearby as well. So what does that mean? What's driving the wheat market higher?
I think last week when the December contract hit a low at 4.95, I think that's at least a short-term low. Wheat is oversold here right now, and we're due to get a bounce. You're going to have some resistance up here at this 5.15, but you're going to have to turn the Dece contract above 5.27 to turn the trend higher. Otherwise, just maybe just looking at a little bit of a modest bounce before the market heads lower. A problem with wheat, we just still need some export business.
That is very true. All right, and it has been picking up a little bit lately. We'll see if they can continue that. Dewey, we'll come back in a moment. We'll take a look at livestock trade as well right after this. Let's go back to our talk with Dewey Strickler of Ag Watch Market Advisors. He's based in Franklin, Kentucky, and he rejoins us right now. Let's take a first look at our livestock trade here on a Monday, Dewey. And as we go to the big board in Chicago right now on live cattle, we currently have the October contract 32 higher at 110.22. Fairly narrow trading range to start things out, about 50 cents wide from the top to the bottom. We have December now 13 higher at 114.42. If you look at the feeder cattle market, though, today, right now, a little bit of weakness all the way from the top to the bottom on the table. We have the September contract now 25 lower. It's at 143.85. And we have the October currently 13 lower at 143.45. We have the lean hog trade today. If we flip over there, showing losses and significant losses here. Let's take a closer look, shall we? On the lean hog trade, we have the October contract down $2.13. Ouch, 77.33 is the last trade there. That's $1.60 off of its earlier high already this morning. And December down 177 now at 76.33. So the cattle market is narrowly mixed here. We didn't have a whole lot of guidance from the cash cattle market as we slid into the weekend there, do we?
Yeah, the cattle market might edge just slightly higher, but to me it looks like it's about ready to break. Technically, we are overbought here in the cattle, and we could easily see a $2 to $3 break.
And that's based on technical factors. What about the hogs? Did you see that big break coming today?
Actually, I think we'll see the hog market. When you look at the October contract, we'll see it break further. I think it'll come down into about the $76 range.
Now, is the pork market or the lean hog market actually caught up in these China trade talks, do you think?
Well, I think, we have risen here since earlier this month on the trade talk deal. Now that they are going to start here today, it's always kind of, you always hear buy the rumor, sell the fact, and I think we've done just exactly that.
So did I understand correctly, is the Fed coming out with an announcement on Wednesday whether they're going to reduce interest rates or not?
I've heard and understand that that's what the story is.
All right, so what do you think they may do this month here?
I tell you, I don't know if the Fed knows what they're going to do.
I see the Dow this morning is trading about 27 points higher. I want to take a quick moment here and check out our energy markets too. So far on the crude oil market this morning, this will be West Texas Intermediate crude that we're talking about. We have the nearby September contract now 29 cents higher at $56.49 per barrel. That would be kind of in the middle of our trading range here today. If you look at the heating oil trade, that's how we establish our prices for our diesel fuel. And currently on heating oil, a little bit firmer. We have the September contract now, about 0.3 of a cent higher, and we're trading at 191.7 per gallon. Well, Dewey, thanks so much for the navigation here on the markets as we get rolling on a new trading week. Appreciate that very much. Hope you have a good week out there. Dewey Strickler of AgWatch Market Advisors. He's in Franklin, Kentucky.
All right, gentlemen, as always, thank you very much.